Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is September 6th, 2018, and today is Thursday morning. So looking at the economic events of the day, starting out earlier this morning, out of Australia, we had trade balance numbers coming out, and then at 2:15 South African time coming out of the United States, ADP non-farm employment change. And that's a preliminary number to tomorrow's non-farm payroll. And then at 4 o'clock South African time, ISM non-manufacturing PMI number coming in the United States. And lastly, at 5 p.m., weekly oil inventories numbers coming out. Now, just to make a few points of what's happening in the highlights of the day. So stocks kind of look weaker. Okay, if we look at the stock markets, we'll take a look at that in just a moment. But is the US dollar actually getting stronger? Not sure if that's actually correlated properly right now, and we'll take a look at that. Tomorrow, just to make sure that you guys know, is non-farm payroll change, so just be aware of it. That is a major number, so please be aware of it. It's going to be happening at 8:30 Eastern time, Eastern United States time, and that's at 2:30 South Africa time, so just be aware of that. But let's take a look at markets and see what's been happening.
This conference will now be recorded.
So we're taking a look here at the Euro USD, and we kind of, rallied earlier this week, capitulated down to 115.53-ish level, and then, rallied all the way to 116.40-ish level. We're trading right now at 116.20. So nothing really, to write home about the dollar getting stronger here. Okay. However, as we mentioned before, the Aussie USD, if we take a look at that, you can see that, it has been changing here, and it is on multi-week support level at this 71.68-ish level, as you can see here at the bottom of this range. So it may continue to falter. So, the stocks are getting weaker, and that usually imposes some strength to the dollar, but that's not been happening. Okay, so just, we may play some catch up. Okay, so just be aware that, the correlation is not actually happening right now, but, it may actually it just needs some time to catch up. So if we're looking at a 4-hour chart, you can see that we're right there at our dead lows, but we haven't really broken out further. Okay, but I'd like to see some breakout here on the downside to get a little bit more aggressive, if this does correct itself on the downside. Now looking at the GBP USD, it's changed character. It's strong like a rock here. Okay, 129-ish level, and holding that level, not breaking down further. Okay, after this nice rally from last week. So just be aware that, as this has, been capitulating down here and really consolidating and not really, breaking further down. Okay, this might be a sign of the times that the dollar is not going to be necessarily getting stronger anytime soon. So just be aware of that as that unfolds later this week. Now, however, the USD ZAR is not the case. We're breaking out lower ZAR versus the dollar, and we're trading at 115.48. That's a massive retracement for the rand versus the dollar, as we could see. It's the low of the year. Okay, if we look at a daily chart, we look at a weekly chart, we're back on our, close to our all-time lows of the year, multi-year, excuse me, as we close in at this 1660-ish level. Okay, so the trend is still your friend, and you don't want to be looking to short this or short the dollar versus the rand, because it just conceivably could get back to the 1630 level quite quickly. Now jumping to the JSC, we saw a further decline in the JSC, selling off to 57.51. Okay, we had this fake out breakout before, as we called it earlier this week, and then completely falling apart. So that's something to keep an eye out later today as this continues to trend lower. Now looking at oil, oil's hit this snag at this $70. Okay, if we look at this, resistance level at $70 right there, 70.17, you can see that we've hit it several times. Okay, so it is a choppy market. We're right now trading at 68.53. All eyes are on the inventory to see, which direction the price of oil will be going. Now, I still believe that we'll be trading between the $64 to $70 range, okay, as we hit the hurricane season, as I mentioned before. So we're right almost in the middle of that, okay. Closer to the $70 range was a better sell, okay, a short sell. But as we were, closing in at this 67, we're kind of like right in the middle of these two ranges between 64, 61 and $70 a barrel. So just be aware of that, okay? If we do get a little bit of a bounce today, maybe it'll be a decent short. So just keep an eye on that as that continues to trade. Now, jumping into, I'm going to first go to the NASDAQ before I go to the Dow Jones. NASDAQ selling off quite sharply yesterday, as you can see, to 75.21 from 76.70. Now that's a sharp move for the Nasdaq. Okay, it's only 100 points, but the Nasdaq is only trading at 7,000 points, not trading like the Dow Jones, which is trading in the 20,000, 25, 26,000 levels. Okay, so 100 points relative to the Nasdaq is a much bigger move. So we had this nice sell-off. Now the big bellwethers, excuse me, also sold off, Apple and Facebook and so on and so forth. But the real weakness was Tesla. Okay, and this was what I was speaking about yesterday, is that this was closing in on a support level, and then once it showed the market turned on the short side, on the sell side, the first one to go down was Tesla. Okay, we sold off more than $9 a share from yesterday. Okay, which is a nice sell off. Now I wouldn't chase this at this level to try and short it, but just be aware that it has broken down. Okay, and it did to its character stay weak, okay, which is what we like to see. Now, if we look at Facebook, same story. We broke below this $170 to 167. Not as sharp as Tesla, but still breaking down. Okay, so this is, a really, great situation, great opportunity, as I mentioned yesterday, when the stocks, when the Nasdaq, when the indices start selling off, the stocks will catch up and start selling off, and the weakest ones will go first. Okay, and in this case, it was Facebook and Tesla. If we look at Apple, it sold off, but not so sharply. Okay, to $26 of a share from 229, and still, the sentiment is quite aggressively bullish on Apple stock. So just be aware that that as it's selling off, they may see a quick turnaround on the upside, as people look to grab this on the upside, and the anticipation is going to go even further higher. Okay. However, looking at the Dow Jones, didn't sell off so much. 25,960. We're only about 40 points off the 26,000 level, and we are in a sell-off period of the year. Okay. September, October, November are historically the biggest sell-offs the indices see throughout the year. So just be aware that if we're trading close to our highs at this time of the season, we may see ourselves hitting 26, 27, maybe even 28,000 towards the end of the year in 2019. So just be aware of that, as that, on a longer term basis, keeping that eye out. Now, lastly, can't, not discuss Bitcoin. If we look at Bitcoin, big nosedive yesterday from 7,300 down to 6,300. 1,000-point move. Now, this is what I was talking about earlier, is that every time I cover Bitcoin, it's so frustrating, because I always say, guys, it's not going to be some follow through. There's not going to be enough volume to carry this, particular asset up, and that's because, it's still in its infant stages. Okay, it's been trading for a few years times two. Okay, so it's been trading for about 6 years already. All right, but it hasn't really shown us that it has consistency over time. Okay, it's still a very big wild card. So every time you see it going up and it has this nosedive, just be aware, okay, especially for those that are, celebrating the fact that they're investing in it and all that stuff. And just be aware that it is a very volatile, thin traded asset, which means that it's not going to have as much follow through. It's not going to sustain itself as something like, something as backed up as an asset like a Forex symbol or an index, or even a commodity for that matter, okay? Because it's still in its infantile stages, and there's not much volume actually happening to carry this further, and the slightest bad news carries this thing further down. Okay, technically speaking, we're still within our range. Okay, as long as we haven't broke the 58-ish level, 5800-ish level, we're still going to be trading between this 7,500-ish level, let's call it, and 6,100-ish level. I think that's most of where you're going to see most of the activity, but be aware that it is still very thinly traded. This is Fred Razak. I want to wish you guys a great trading day. Thank you.